Hey guys, this is Mark Shaw's the Pattern Trader. One night during a game featuring the hockey great Wayne Gretzky, the lights went out in the hockey center. And so there was a delay in the game. And so the broadcaster in the booth decided to go down and speak to Wayne. And he pulled up beside Wayne, put a microphone in his face and say, "Wayne, you're not the fastest guy out there. You're not the strongest guy out there. So how is it that you're able to achieve all the great things that you do?" And what Wayne said was, to me, one of the most profound things that I've ever heard. So Wayne said, "I don't skate to where the puck is. I skate to where the puck is going to be." So let that settle in on you. I don't skate to where the puck is. I skate to where the puck is going to be. And I think that this is a very apt metaphor for trading. And in particular, I suggested to our members several weeks ago to start putting a small, obscure stock called Kratos Defense and Security Solutions, ticker symbol KTOS, on their radar because I was seeing a very intriguing setup. In fact, this was the same setup that I saw in spot silver before spot silver exploded from the $15 level all the way to $30. Now, to put it, in the same comparison, to my mind, Kratos is trading at $15. So I think that there's a long way for it to go. In fact, Kratos KTOS just broke out today above its all-time multi-year highs, trading at about 32.75. Now, last week, the stock dropped out of a double top price pattern at around $30 and plummeted to $26. Now, if you were just focusing on that short-term double top and not looking at the long-term potential of the stock, you might have been caught on the wrong side or missed this opportunity entirely. But to my mind, I looked at that as a huge opportunity. So I wasn't watching where the puck is, meaning I wasn't watching that the stock was down. I was looking at where it was going to be. And I had a vision that this thing was going to go higher and make all-time new highs, which is exactly what it did today. And instead of buying the stock, I bought the call options because of some of the unique characteristics of the call options at the time I was buying it. Typically, when you buy options, you usually buy about a week ahead. If you start buying any further, it starts getting very, very expensive. But I found that I could buy the March 19th call options with the strike price at 32.5 for about $1. Now, this is when the stock was trading at $28. So I was what's called $4.50 out of the money, meaning that in order for me to make money, not only would KTOS have to go above the 32.5 price, but it would actually also have to cover the dollar that I paid in premium. So my break even was $33.50. Now that's quite a bet when the stock's trading at $28. But to me, I had 6 or 7 weeks in time premium that would allow me, to see what this stock was going to do. And in a week, the stock has gone from $28 and now it's what's called in the money. It actually went to $32.75 in today's market, which means now I'm 25 cents in the market. And now my call will go dollar for dollar. So I bought my call options for about $1.10. They're trading at about $2.50 right now, so they've more than doubled my money. But if the stock keeps going higher on a dollar for dollar basis, I could make a ton of dough, meaning if the stock goes $5 higher, I will make 5 to 1 on the original premium. So now I'm going to go into the market and show you on a real-time basis what I was looking at KTOS, why I was banking on such a healthy run. And I just want to caution you in advance that option trading is very risky. You can and will often lose 100% of what you put up. And so it's just these unique situations where I see an opportunity where not only do you have to be right about the trajectory of what you're looking at, but you also have to be right about the timing. And again, because I was, got such a great comfort factor being able to park myself in these options for over a month, that I thought this was one of the best opportunities that I'd seen in a long time, and that is starting to be validated in the market right now. This is the real-time chart of the stock KTOS. This is a weekly chart, which means each one of these price bars represents 1 week in time. As you can see, KTOS is currently trading at a multi-year all-time high, about 32.73 right now. But I was buying the stocks and the options right here during this sell-off. I'll go to the daily chart in a moment, show you what I was looking at the time. But during this fall off, I was looking at that as an opportunity. Why? Because the governing price pattern told me or informed me that this stock had nowhere to go but higher. Now you can see buried within this price action is this funky looking asymmetrical double bottom price pattern. Asymmetrical because the one low is much higher than the other, but when we look back, it still has the shape of this W pattern. So we have a double bottom price pattern. Now, in addition to the double bottom price pattern, which is extremely bullish, we also have an inverted head and shoulders price pattern, which is just an upside down version of a head and shoulders pattern. So it's called an inverted head and shoulders. It looks like an upside version of a man's left shoulder. The peak would obviously be the head, and this is the right shoulder. And you can see some time ago, KTOS crossed what we call the neckline, which is effectively a line crossing throughout the pattern. And right here was your breakout. And so once this thing broke out of a double bottom price pattern and an inverted head and shoulders, this informed me that the trajectory of this stock was going to go higher. And just like Wayne Gretzky, I didn't take my eye off the puck. I was looking at where the puck was going to be, not where it was at the time, and started aggressively buying the 32.5 call options at the time when the stock was around $27 or $28, because I envisaged that the trajectory would be higher based on the underlying governing price patterns inherent in this market. Now I'm looking at the stock of KTOS on a daily time chart. This means that each one of these price bars represents 1 day in time, 1 24-hour session. Now, this is a little bit tricky. This may be a little bit hard to follow, but as I tell my members, the price patterns inform me where a market is going to go. But we got a series of price patterns here, and if you really didn't understand what you were looking at or looking at a long enough time chart, you could have easily become confused, because this looks like a classic double top. And when we see these price patterns, this informs us that whatever instrument we're looking at when we see the double top is going to go lower. But as you can see, this thing grabbed a foothold and is now at an all-time high. And so it was looking at the long-term charts that informed me where the ultimate trajectory was going. So I was not fooled by the double top. In fact, when I saw this key reversal here, when the market makes a new low and closes on the high, this said to me that we were going to go back in the direction of the long-term trend. Now, I know this is a very nuanced discussion. I don't want to get into the reads here. This is what I'm going to discuss in my live webinar series next week, just to demonstrate that I eat my own cooking, meaning that whatever I'm advising our members to do, I'm doing personally. And as you can see, these were the call options that I was alluding to in KTOS. They were the March 19th 32.5 strike price. I was buying these for about $1.10, $1.20, and you can see currently in the market, it's trading at $2.65. It's now just gone into the money, which means that these options will participate dollar for dollar with the stock price should it keep going higher. And as you can see, I've made a healthy amount of dough. I bought these in a number of different accounts. I've spread it over a number of different accounts. And this is what you're seeing as a result of me seeing an early move when the stock was trading around $27, $28. I had the vision that this thing was going to go much higher. I put my money where my mouth is, and as you can see, it is also going higher. You'll notice that I'm also long the stock price of LYFT. LYFT announces earnings tonight, so this position will go much higher or much lower depending on the earnings results, but I will explain in another video why I got long lift at about $45, $46, and now you can see it's trading at $53.50 or more in the live market. So if you would like to understand how I capitalize on monster moves like KTOS and many other things in the market, then I want to invite you to an upcoming 4-day webinar series where each day after the markets at 4 p.m. Eastern Standard Time, I will go into the markets live. And so you'll effectively be able to look over my shoulder while I show you exactly what instruments I'm looking to trade that day, what the setups are, what the risk reward is, and exactly how I get in these trades and how I also rule out a lot of trades. So once again, I encourage you to sign up as soon as you can. The webinar will be in several days. My team will alert you to the dates. It'll be 4 p.m. Eastern Time each day next week. And we literally had thousands of people on the last webinar series that we did like this. It was so well received that I can imagine we may have tens of thousands and would effectively crowd some people out. So I encourage you, if you're interested, sign up as early as you can, and I will see you on the upcoming live webinar series. Until then, I wish you guys a healthy and prosperous trading week, and I'll see you next time.